Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Rumble, ticker symbol RUM. And so here we are looking at it in the after hours. Actually, the market is closed. It's so late on Tuesday, March 12th, that nothing's going on right now. So I wanted to put this video out kind of late just to give us an idea of what might be happening with the chart tomorrow after a pretty massive day on Tuesday, going up over 18% and closing at $7.90, hitting a high on the day at a price of $8.15. Which opened at a price of $7.01, which does seem like it was a pretty good level to be accumulating at, which I did suggest in the last video on Rumble that $7 was a sale. It does look like that sale might be over, but I am going to go over some levels that might act as guides for perhaps dip buying opportunities or be acting as levels of resistance. But, in the last video, we have talked about, Rumble going to $10 a share. So, I do think that is quite possible, but we do have to be closing above some key levels. So I'm just going to throw up some lines here on the daily chart. I did go over a lot of these in the last video, including these gaps to the downside. I don't think that we're going to be filling those. I do think they are in the rear view mirror, but I did want to point out some levels from this retracement coming from the low that was hit on January 12th, going up to the high hit on February 8th. And so from this, we can see a couple levels that did act as support and resistance. One of those being the 382 at a price of $6.44. Does look like we got a close below that level on February 28th, but the following day we closed above it. So that does look like it was a fake out close below that level. And then just a few days after that, on March 4th, we got a close above the 236 here at a price of $7.17. But that again does look like it was a fake out breakout because we did close below the following day and we did continue to consolidate after that. But this consolidation that we have had following the high that was hit on February 8th does look like it was a bull flag after this big move to the upside, consolidation here, downtrending channel, and it does look like on March 12th, we did break out of that flag, but I do think that, we might be pulling back a little bit to either test the top of that flag or perhaps test one of these levels, perhaps this red downtrend that I have here. And one thing that I think is pretty interesting about this red downtrend is, I'm kind of wondering if this, represents an inverse head and shoulders and that we did break out of it. However, if we did break out of it, I do think that there is quite the possibility that we might be pulling back to test that neckline, confirming the breakout before then moving higher. So I don't think it is too late to be stacking Rumble. I do think it might be returning to around $7.17 before moving up higher than the previous high here. That was at a price of $8.36. So I do think there could be some more opportunities before that price is eclipsed. But, also I do think that it could continue to run. However, we don't see, a giant gap up, a giant move up in the after hours, only about 5 cents. So I think it will be pretty telling what's going on in the pre-market. Maybe we see some big moves to the upside, but those could, be a fake out. As if we do look back at the previous run up, I'm just going to look over at the hour time frame and go back in time a little bit. It does look like when we started to run up, we did, move up a lot in the after hours, and then we pulled back during the pre-market. And, so it was pretty volatile. So I do think, if it is running a lot in the pre-market, I do think that could be, a good time to be patient and wait for it to pull back a little bit before, really loading the boat with this, because I do think there will be some pullback opportunities. And so to get an idea of some levels that might be acting as resistance, I can do another Fibonacci retracement, but rather than going from the low to the high, I'm going to do that from the high here at $8.36 down to the low here that was hit on February 28th being at a price of $6.22. All right, and so from that retracement, we can see some levels that might be acting as resistance. And the one that stands out to me is the 786, which is at a price of $7.90, being exactly the close on the day. So I do find it pretty interesting that we did get rejected from that level. Also, we did hit a high of $8.15, which is higher than the high hit on February 15th, which was $8.02. So we do see, these wick highs over here. Actually, what was the high on February 12th? $8.14. So while we did get a wick higher than that, we could not close above those levels. So those are going to be pretty key to be getting closes above, confirming that there is momentum moving higher. But as of right now, we do not see that. So, with that being said, I think that we could see a retracement to one of these levels. Like, for example, the 618 at a price of $7.54. There could be a little pullback to that. But what I find more compelling is a pullback to one of these three lines here, one being the 50% retracement at a price of $7.29, the other being this yellow line here, the 236 at a price of $7.17, or the 382 at a price of $7.04. And so the reason why I feel that we might be pulling back to one of those levels is because that would be a retrace to the scene of the crime, a retrace to the breakout from this red downtrend. And if we do pull back and confirm the breakout by not breaking back below this downtrend, then I think we could really start to see some moves higher. And so I do think there will be some more dip buying opportunities. But of course, I could be wrong. This could rally, in the pre-market and, during trading day of Wednesday, March 13th, and it could be eclipsing 836. Quite possible. But I do think that we will be seeing a pullback over the course of the next couple of days. That is not to say that I don't think it will be going to $10 a share. And one level that I do not have shown here from this retracement is the one at 618 extension. And so if I do adjust the y-axis, we can see that is at a price of $9.68. So, I do think price could definitely be getting up to around $10 a share, if not higher, or, maybe a little bit lower. But that does represent a pretty good amount of upside. And so even if establishing a position at $8 a share, going up to $10, that's a 25% swing. So I do think that's pretty good. But, I do think that there could be a pullback. So I do think it's good to perhaps average into a position, maybe establish a quarter at 8. Then maybe, establish another quarter at $7.50 or $7 until you build up to that full position and then wait for it to hit 10, if not higher. What am I doing? I have a pretty small position. I might add a little bit if it pulls back, but I'm just going to be patient with this one. But, I think that the chart looks really nice after we've had this bullish consolidation. I do think $7 was a bargain sale. And I do think it's going to be moving a lot higher. So I'm pretty excited about it. I hope you are too. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.